There are 12 principles of cash flow. Stick around because I'm going to be going over number 6 through 12, or actually number 7 through 12, but you got to stick around for number 12. And this is why, because it's going to really piss off a lot of accountants. Sorry, I love accountants. You got to stick around. But first, let me tell you, if you are a bookkeeper, if you are an accountant, and you are struggling to figure out how to help your clients, you know how to do the historic stuff, but you don't know how to fix what's going on today so they can survive and thrive. Well, then you need to look at Pivot 2026, the Unconventional Cash Flow Conference. It will be a structured case study where in just 4 short days, you will get all the fundamentals that you need to be able to go do cash flow advisory work for your clients. So if you're seeing that need, you need to get in touch. Go to pivot.com, 2026.com, and go take a look. So let's get down into it. 1 through 6, we worked with at the last show. We're trying to make these short. So today I'm starting off with number 7. Here's principle number 7 is start with model and manage cash flow. What does that mean? There's a 5-part process that we go through: model, manage, mentor, maximize, and mindset. Now, mindset you've always got to deal with, but model and manage is so important because so many companies do not need to sell more. They don't need to do anything different than with what they already have. They don't have to borrow money. They can make do with the assets that they have, assets being accounts receivables. It could be the people power that they have. It could be inventory. Every company has assets. And most companies can fix cash flow by first modeling their current cash flow and then managing the future, which is bringing money in faster or pushing expenses out. So that's number 7. Number 8, overcome momentum. Now, this might sound like it's sort of Newton's law, but this is the issue. When somebody is doing something, they've done it always, they've done it all the time, over and over again, and you say, why? They just say, well, that's why we've always done it. It is really tough to overcome that momentum unless there's force, there's continual effort, there's focus, and that's how you make changes to how cash flow will go through a company. Number 9, do not fix the symptom. If you had a broken arm and it hurt, and you went to the doctor and the doctor said, here is an injection of morphine, it would stop hurting for a little while. And then you'd have the same problem. You got to fix the broken arm. It's the same thing when you have cash flow issues. They are oftentimes, hi, Kelly, thanks for being here. They are oftentimes just that. They're symptoms, and business owners do not know what the real problems are. You have got to go to number 10. So principle number 10 is keep digging. They start with the symptom. You've got to say why, or say, tell me about that. Tell me about your accounts receivable. Tell me about what people say when you call them and you ask them about their accounts. Why didn't they pay? You've got to keep digging until you finally figure out. In this case, I had a client, they didn't have an accounts receivable system. They just sent it out. They set it and forget it. And all of a sudden they said, what? We should be calling them. And literally tens of thousands of dollars came in within 2 weeks. That was enough to pay for payroll 3 or 4 times over just by starting to make some simple phone calls. So that was the real problem. You got to keep digging. Number 10 is digging. Number 11, find reality. Everything should reflect reality, not what you want it to be. So a lot of times a bank will say, well, I'll tell you this one. This is a great one. Okay, find reality. The bank asks my client for a cash flow forecast. We said, okay, here it is. And we looked at the clients and when they were paying, when we could expect to get paid, what the balances were going to be in the bank account, et cetera, et cetera. We knew because we projected cash flow realistically what it looked like, and it didn't look good. The bank came back and said, oh no, that's not what we want. We want an accrual-based P&L, profit and loss. That's not reality. That is accounting theory. So when you put down that a client pays in 30 days because that's what your invoice is, but the reality is they pay in 60 days every single time, how do you not deal with reality? Well, this banker didn't want to, and the loan went south shortly after they gave it to my client, unfortunately. So when you're doing cash flow, look for reality, not what you want it to be. Finally, and this is the one, number 12. Now, forgive me, because what is the goal of so much of life is to be perfect. Principle number 12. You are not perfect. Get over it. You'll never be perfect, and therefore, your forward-looking cash flow statements will not be perfect either. It's impossible. We do not know. We can predict the future with a certain amount of accuracy, but at the end of the day, we make mistakes. You need to stop being afraid to get it wrong. You need to stop being the little boy or little girl in third grade or fourth grade who, yep, great, Ellis, you're going to be perfect, but I won't be. That's fine. You got to get over it. I'm not perfect. These recordings aren't perfect. That's life. The challenge is that too many people think we're talking about accounting. And accounting, you get it wrong, you get it right. And there's a fear. So get over it. So I'm going to go back through I'll start with number 1, focus on cash. 2, use common sense and plain language. 3, pick any 2 points in time. The difference is your cash flow. Number 4, positive and negative cash flow strategies can exist simultaneously for the same strategy. Number 5, people are key. 6, there is no box. And then we've gone through 1 through 7. Go back, take a look at last week's. Thanks for being with me today. There's a few people live. Most of you will be watching this recorded. Go back and look at number 1 through 6. And remember, think cash, not accounting.